Hey, what's up, traders? Today in this video, I'm going to be talking about setting alerts. Okay, setting alerts can help you monitor the price movement of a stock. Basically, it keeps you up to date with the price action of the stock without having to watch it intently. So what you can do is set an alert, right? And when your alert goes off, that's a signal. Hey, I need to go back. I need to check on my stock that I had my alert set on. Is this a good place to buy? So let's talk about three places that are good to set alerts at. Okay, the first place being when the stock has previously run up and is on a dip. The second place is at a larger moving average on a larger time frame. Okay, so you want to be on the daily chart. You want to set an alert at the 200 EMA or the 50 EMA. And the third place to set an alert is at all-time highs or 52-week highs. Okay, so let's give an example of each one. The first one being when a stock has previously run up and is on a dip. So I'm on the daily chart here for ticker ZM. And this is a perfect example of when a stock has previously run up and is on a dip. Okay, so when it ran up and hit this dip, I set my alert right here at 78. And this was going to be right over this high, right over this open on this day here. Okay, and I saw that we had some previous resistance and support back in this area. So, you know, I was interested in ZM the second that it got over 78. Let me jump into the 5-minute chart here. You can see that when we opened up today, we opened up right at 78. So with this thing gapping up, opening up right at 78 on the alert, you know, it was previously a run up and a pullback. This was telling me that this ticker has potential for the day. Okay, so you know, you'll want your alert to be at a point. Let me go back into the daily chart here. You will want your alert to be at a point that is higher than the low of the dip. Okay, so if it dips here, right, this is the low of the dip. I'm going to want my alert to be, you know, somewhere here or somewhere here. Just set your alerts at increments on the way ups, and especially over the break of this high here on the previous run up, and that's how you're going to get these big breakout moves. Okay, the second place to set your alert is at the larger moving averages. So let me look at the chart for ULTA, ULTA. This is a gap play coming down. You know, we've been tracking this thing on the way up, and we hit this blue line, which is the 200 EMA, and pulled back, and you can see that we've been treating this blue line right here as a resistance. Okay, so this is where I would set my alert, and this is where I did have my alert set, right here at 275, right at this blue line, right at this 200 EMA. We've talked about how the 200 EMA is such a powerful moving average for stocks, especially when used on the larger time frames, when used on the daily chart or when used on the weekly chart. So you want to consider setting alerts above or below this moving average or the larger moving average. It can be any, it could be the 50 EMA, it could be the 200 EMA, and this will tell you when the stock is worth taking another look at it. Okay, so typically, not all the time, but typically, a stock trading above the 200 EMA here is saying that it's bullish, and the second that it breaks down from the 200 EMA and starts trading below it, it's bearish. So, you know, you set an alert below the 200 EMA. Once it breaks down, you can start shorting it. It's set an alert above the 200 EMA, and once it breaks above, you know, you could start buying it. Okay. The third place to set an alert is at all-time highs or 52-week highs. There are two great charts for this. Number one being Tesla. Okay, so this chart has gone absolutely parabolic. I mean, this is insane. We were previously trading at around 350, and now we've basically doubled that. It's, you know, 786 is where we hit our highs. A stock that is constantly moving up like this, set your alerts at the highs. Okay, so you can see we're on the daily chart, which is going to be our 52-week chart here. we will be watching. If we were to set alerts at all-time highs every time it broke out to the top side, we'd have an alert here, we'd have an alert here, we'd have an alert here, we'd have an alert here. So it dipped, right? But it came back up. As soon as it hit our alert, we'd buy. Dipped down, broke through this level, hit our alert, buy. Broke this level, buy. And you could buy it all the way up. The same thing goes for Apple. Ticker AAPL. Just another one that has been absolutely monstrous over the past few months. And every all-time high, every dip, every 52-week high that was broken, this thing was just bought up. Okay, so traders are watching this. Set your alerts at all-time highs, at 52-week highs, at larger moving averages on the larger time frame charts, such as the 200 EMA and the 50 EMA, and when the stock has previously run up but is currently on a dip, you're going to want to set your alert at a point higher than the low of the dip, so that when you break out to the top side, you can consider entry when the stock moves back up. So let me show you real quick how to set an alert. Okay, so with the Thinkorswim platform, all you're going to do is right click here, go down to create alert, and this is it. At or above, what price do you want? Select your price, create. You can change this to at or below, at or above, or just below and above. I usually use at or below or at or above. It doesn't really matter. So hit create, and there you go. Your alert is set. That's it, guys. That is all that I have on setting alerts. I hope that this video has helped you out. If so, please like and subscribe, and I'll see you guys in chat.